The IRS just adjusted its tax income brackets. Are you ready? You may have heard that the IRS is adjusting its tax income brackets for next year. Tax consolidation is the reason behind these changes. The IRS is trying to simplify the tax code. What does this mean for you? The adjusted tax brackets should make it simpler for you to figure out how much you owe. It should also make it easier and faster for the IRS to process tax returns, and it will allow you to pay less in taxes. Let's get into a little more detail about these tax bracket changes so you know what to expect next year. So, how do tax brackets work in the US? The US has what is called a graduated or progressive tax system in place. That's the opposite of a flat tax rate or system. You're taxed at different rates depending on how much you make each year. Currently, the rates are 10%, 12%, 22%, 24%, 32%, 35%, and 37%. These are referred to as brackets or thresholds, which, by the way, they could simplify the tax code by simply doing this. Make a federal tax rate of 10%. That's it. No loopholes, no ways to write off, just 10% flat, no matter who you are. And that would just make things so much simpler. So, how will 2023's tax rates differ from 2022's? In 2023, the amount of money you can get paid before you ascend into a higher tax bracket will rise. That's good news for you since you'll likely have to pay less in taxes even if you're making more money next year. Again, the reason the federal government wants to make this change is to simplify the tax code. But it's also to provide for families and individuals with relief who are feeling the pinch because of inflation. The cost of many goods and services is rising, and this action should help to counteract that. It probably ain't really going to help. So, an example of this change, let's look at an example of how your 2022 tax rate might differ from next year's. In 2022, we'll say you're a single filer and you make $41,776. That is as much as you can make to qualify for the bracket where you must pay 22% in taxes. In 2023, you can make as much as $44,726 and you'll still qualify for that 22% bracket. That means you can make an additional $2,950 and you will not have to pay more tax on it in 2023 than in 2022. You can pocket those savings in any of the tax brackets. The more money you make, the more you'll potentially save under the new tax code. Now, what about if you file jointly? If you file your taxes jointly, you can still benefit from changes to the tax brackets next year. For instance, using the 22% tax bracket as a threshold again, if you file jointly in 2022, you can stay in that threshold up to $83,551. Next year, you can make a joint amount of up to $89,451 and remain in that 22% bracket. That's a difference of $5,900. So these changes mean you'll keep more of your money. All this might sound a little confusing, but the main takeaway is that when the IRS changes the tax code next year and adjusts each of the brackets, you can keep more of your money no matter which adjusted tax bracket you fall into. You'll have to give the IRS less. If you go to the IRS website, you'll find detailed tables that show the tax brackets as they stand right now and how they will change in 2023. You can probably estimate how much you'll make next year, and when you do, you can apply that number to the table and estimate how much more of your money you'll be able to keep. In the face of inflation, a bear market, and other economic concerns, it's nice to know that the IRS is taking steps to alleviate some pain for the average American. The money you pocket from paying less in taxes next year could amount to hundreds of dollars or even thousands. The thing is, I don't really think that they're doing this to try to help people to save money on their taxes when they hired a whole bunch of new IRS agents to go after people not paying their taxes correctly. So, yeah, how much do you really want to trust this? Probably not much. And here's the thing that you got to keep in mind too. Typically, on average, for most people, your income grows every year, right? As long as you're staying in the same field, in the same job, whatever, your skills will improve. You end up getting better over time. You make a little bit more money. You get a little bit more responsibility, etc., etc. So if you're already on the brink, right, you're going to surpass your tax bracket regardless, right? Unless you want to stay in a lower tax bracket, which you probably don't, because that means that you're making less money, right? And what I mean by this, a lot of times people fall into a trap of, oh, I don't want to make a certain amount of money because then I'll be in a new tax bracket, right? And people will face that regardless of that like tax bracket wall, right? People are always going to see that tax bracket wall and be like, ooh, I don't know if I really want to make more money than that amount because I don't want to pay that extra amount in taxes, which is just stupid, right? The main goal, if you want to make a bunch of money, the main goal is to make as much money as possible to the point where, regardless of how much money you get taxed, it doesn't matter, right? In terms of like, you just have so much money left over, it just doesn't matter, right? That's the way to really look at it. So let's check out some of the comments. They didn't just hire 87,000 new tax auditors, each making over $60,000 a year, just to collect less money. The IRS never gives you anything. Yeah, agree. Abolish the IRS, Google the fair tax movement, and join groups that pressure Congress. And here's the thing, I understand the concept and purpose of taxes, but I only understand it if it were to be a flat tax with no loopholes, right? If you can't have exemptions, if you can't do any of these like weird tax methods to basically get into a point where you're never paying any taxes, but you got to spend all of your money and blah, blah, blah. Like, I like the idea of every single person that makes some sort of income pays a flat tax. If you make $10,000 a year, you pay 10% of that. If you make $100,000 a year, you pay 10% of that. If you make $1 million a year, you pay 10% of that. If you make $100 million a year, you pay 10% of that. No matter what. But the main thing is, you can't have any loopholes. I think that's the fairest way for everyone, right? Because one, it makes paying taxes far easier because you know exactly how much you owe, right? So you're not going to get in trouble. And then two, by not allowing there to be any loopholes, that means that everyone's going to end up paying taxes. Now, of course, basically, people try to say like, oh, well, I mean, if you don't end up actually having an income, you can't really pay taxes, obviously, right? Which some billionaires will always do, where they basically have no income because they're living off of debt. But feel free to give your thoughts on this. It's just that I don't really necessarily trust the IRS in terms of their big 3 times sized heart in this holiday season, you know.